There's a new generation of banking consumers, a huge problem or chance for traditional banks. Changing or leaving? What needs to be done? Which platform is a basis for the new challenges? That's what we want to talk about with Appian, an American software provider. My name is Ralf Czepanski. Welcome to the Business Debate. Michael Heffner, Vice President Financial Service of Appian. You say every company needs to become a software company. Why? Are you hoping for more customers?
We're absolutely hoping for more customers. I appreciate that question. The reality is, every company truly is in an environment now where software is eating the world. We didn't invent that phrase, but we're seeing it realized, especially in banking, where banks have to compete for every customer, have to respond to regulatory requirements, and the mechanism in most cases is to modify or build applications.
Does the market share this point of view, or is digital transformation, first of all, a buzzword?
Yeah, I think there's a little bit of a buzzword effect here, but the underlying transformation is real. So if you look at the agenda of top 2,000 firms around the globe, digital transformation tends to be in the agenda, at least, of 3/4 of those firms, with digital transformation representing the #1 spot with at least half of those firms. So I think there's a lot happening there.
FinTech companies are emerging by the day and in flux with minimal costs. They are out to eat bankers' lunch. How can traditional banks compete and thrive in the long run?
Yeah, I think the FinTech revolution, if you want to call it that, is actually a really good thing. And I think it's customer driven. And if you look at what the FinTechs are doing, they are attacking gaps in value. So they're figuring out for a particular part of the value chain, how do we create a better mousetrap? How do we create more value for the customer? It's really spurring traditional banks to respond. Some of the traditional banks will go and buy a FinTech, but I think what's also interesting is the number of innovation labs that have been stood up by banks that have direct line of sight to the board and the C-level. I think banks have to rethink. They have to orient themselves towards the customer, and I see that happening.
But there are the consequences that were drawn out of the financial crisis. Does the dinosaur trying to shake up the chains?
Yeah, dinosaur is a good phrase here because, it's tough being a bank these days because you have invested over decades in legacy technology. So the real challenge is, how do you take the best parts of what it means to be a bank and respond quickly to customer demands and market demands? Luckily, there is new technology available that can actually help banks accomplish those outcomes without having to rip and replace what's already there and what's working.
On the other hand, there are the customers. Their expectations are rising extremely, everything at every time. What is necessary to deliver these expectations?
Yeah, I think it's very true. So it's more, faster. Much of that's being actually driven by this intergenerational transfer of wealth that we're seeing. Depending on which firm, analyst firm you focus on, upward of 30 trillion in values being transferred from one generation to the next. I think what really is required is a rethink by foundational legacy banks of how do they get the best of what they have and deliver the new, focused on that segment.
And if not, is there any loyalty?
Well, loyalty, I think traditionally in banking has centered on this concept of stickiness and high switching costs. I don't think that's enough. For banks to compete in the future, I think they need to innovate, they need to focus on value, and there's lots of, luckily, there's lots of new approaches and new technologies that can help banks. So your bank is dead, long live your bank.
Michael Heffner, thanks for this business debate.
Thank you.